Hey everyone, welcome back to Corporate Decoder. Today VCTR just filed an 8K announcing a major acquisition, and I am seeing a strategic move that could reshape the asset management landscape. Quick note, this is not financial advice, just my take on public filings for educational purposes. This filing is all about Victory Capital buying First Eagle Investments, and we need to understand why this is a big deal for the company and its investors. So what we have here is a current report filed by Victory Capital Holdings Incorporated, or VCTR as it is known on the stock market. This is essentially a heads up to the public that something significant has happened, and in this case it is a big acquisition. The date of this report is the 26th of August 2026, which is also the date of the earliest event reported. Victory Capital Holdings Incorporated, a company incorporated in Delaware, is making this filing. You might know them from their ticker symbol VCTR. They are in the financial services and asset management business and have a market cap around $7.5 billion. They are buying another company called First Eagle Investments. This deal involves cash and stock from Victory Capital. The press release announcing this is attached as an exhibit, which is where we get most of the details. This acquisition is a pretty significant step for Victory Capital. They are acquiring First Eagle Investments from Genstar Capital. The deal is for cash and stock, meaning Victory Capital is using both its own money and its company shares to make this purchase. This kind of deal can be complex, but the main takeaway is that Victory Capital is expanding its reach and capabilities. It is important to note that this deal is subject to the usual closing conditions, meaning there are still some hurdles to clear before it is officially done. The core of this filing is the announcement of this acquisition. The press release, which is Exhibit 99.1, gives us more insight. Victory Capital is buying First Eagle. This isn't just a small purchase, it is a major strategic move. The news headlines from around the same time confirm this, with reports saying Victory Capital's acquisition is creating an asset giant and combining over $571 billion in client assets. This makes sense given Victory Capital's market position and the size of their existing business. Now, whenever a company announces a big deal like this, there are always forward-looking statements. These are essentially educated guesses about the future. The company is required to tell you that these statements are not guarantees. They are based on current expectations and assumptions, and actual results could be different. This is standard practice for public companies to protect themselves from future lawsuits if things don't go as planned. This part is crucial for investors because this deal involves stock Victory Capital will need to get approval from its shareholders. This means they will file a proxy statement with the CC. This document is where they lay out all the details of the deal for shareholders to review. The company is strongly advising investors to read this document carefully once it becomes available. It will explain everything about the acquisition and why they believe it is a good move. This section talks about who might be influencing the shareholders' votes on this deal. It mentions that the company's directors, executive officers, and some employees could be considered participants in asking for shareholder approval. This is also standard procedure. They will disclose who these people are and what their interests might be in the transaction, such as if they own shares or have other financial ties. Information about these individuals can also be found in the company's previous filings, like their annual meeting proxy statement. Here we see the formal sign-off of the report. Nina Gupta, the Chief Legal Officer, has signed this document on behalf of Victory Capital Holdings Incorporated. This confirms that the company is officially submitting this report to the Securities and Exchange Commission. The date of the signature is the 26th of August, 2026, matching the date of the filing. This is where they list all the attached documents. The most important one is Exhibit 99.1, which is the press release announcing the acquisition. This press release is the primary source of information about the deal itself. They also list Exhibit 104, which is the cover page interactive data file, a standard requirement for filings to make the data machine readable. You know, keeping up with all these filings and understanding what they mean for your investments can be a real challenge. That is why I want to tell you about Decoded.report. It distills complex corporate filings into easy to understand insights, showing you where a company stands on risk, red flags, share dilution, and insider trading. All updated in real time. You can find the direct link in the description and the pinned comment so you can check it out later. So with that out of the way, back to the filing. So let's look at the bigger picture. Victory Capital is buying First Eagle. This is a massive deal that combines two significant players in the asset management world. Victory Capital already manages a large amount of money, and adding First Eagle's assets will make them even bigger. This is a strategy to gain scale, attract more clients. and potentially offer a wider range of investment products. We often see companies in competitive industries make acquisitions to grow their market share and become more efficient. When companies like this make a big acquisition, it can have several effects. For Victory Capital, it means integrating a new business, which can be challenging. They need to make sure the cultures of the two companies mesh well and that the operations run smoothly. From an investor's perspective, they'll be looking at how this acquisition impacts Victory Capital's profitability, its debt levels, and its overall growth prospects. The fact that the deal involves stock means existing Victory Capital shareholders will see their ownership stake diluted. Think about a previous situation like when Kodak did a 1-for-20 reverse stock split back in 2021. Holders saw roughly a 40% additional drawdown over the following 90 days. While this is an acquisition and not a split, large deals can also introduce volatility. A $1,000 position in VCTR might see fluctuations as the market digests this news and its implications. The success of this acquisition will depend on Victory Capital's ability to successfully integrate First Eagle and realize the anticipated synergies. The market seems to be reacting positively to the news, with headlines from the 27th of August 2026 suggesting Victory Capital is hitting fresh highs and that there is still room to run. Analysts are also highlighting Victory Capital as a stock growth investors might love. This indicates a general optimism around the deal and its potential benefits for the company. However, it is important to remember that acquisitions are not always smooth sailing. There are risks involved, including potential integration challenges, unforeseen liabilities, and the possibility that the expected benefits may not materialize. The market often reacts strongly to news of major deals, and investors will be closely watching how Victory Capital executes this acquisition. What I am actually looking for is how this acquisition will impact Victory Capital's earnings, per S-Hare, and their ability to maintain profitability over the long term. It is a big bet and the market will be watching closely to see if it pays off. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.